Hi, this is Krishna Merchant and thank you for joining us for the market roundup. It was a very volatile day for the Indian markets. In the morning, the RBI measures which were announced late yesterday had a calming impact on the market. Both the Sensex and the Nifty opened higher, and BSE BankX being the top gainer today. This was because yesterday evening RBI came up with measures which allowed the banks to put their bond portfolio in the hold to maturity category, where they wouldn't incur mark-to-market losses. Remember, in the last couple of days, the bond yields have risen to 9.5%, highest level since 2001. As a result, there was a concern that banking stocks would, especially the PSU banks, would take a big hit on their bond portfolio because of the bond yields rising at a much faster than expected pace. However, these measures failed to have any calming impact, and the Sensex reversed intraday and ended sharply in the red, down over 300 points. We have with us Lisa Pallavi Barbora, who will tell us what exactly happened during the day and why did markets give up all the intraday gains.
Yeah, hi Krishna. You know, it was a very, very confusing day because markets did open up quite sharply positive, and then finally benchmark indices ended with the losses of around nearly 2% today. And that brings the tally for the last 4 trading sessions to around 7.5% decline for benchmark indices. And you know, we don't see that kind of move in a month's time or even in a quarter's time, what we have seen in just 4 trading sessions. Now, if experts are to be believed, then it seems that FIIs are shorting index futures, and that is what is causing this kind of sharp fall, because there are pretty much no buyers in the market, which means that even a little bit of selling can cause a lot of damage. There were some reports which do suggest that there could have been some short covering in the morning trade. However, there are no confirmed positions in the market on the future side, at least, to confirm that that is true. Right now, all that can be seen is shorting of index futures by FIIs. On the fundamental side too, there are quite a lot of fears that are driving investors not to buy. So Krishna, what's that about? What's happening on that front?
Yes, Lisa. Fundamentally, nothing has changed in the markets. The US Federal Reserve Open Market Committee is going to announce their minutes today, and there are expectations that they may taper earlier than expected, because in the last week the labor market, that is the jobs data and the consumer price data, was much better than expected. Also, underlying fundamentals are very weak. The earnings season just gone by has not been very optimistic. Downgrades continue. The sales growth has been very tepid at around 3 to 4%, and also many economists have cut their growth forecast for the current fiscal year. So fundamentals are weak, and it's not surprising since July 24 the markets have fallen over 10%. Yes, Lisa, fundamentals are weak, but was the selling broad-based today like yesterday?
So yeah, today's selling thankfully was not as broad-based as we've seen in the last few sessions. As Krishna, you mentioned, banking stocks did open up with quite a positive bias, and they did close in the green as well. So the BSE BankX was up around 0.5%. If you look at some of the private sector banks, and HDFC Bank was up around 1.6%. Some of the very beaten down ones like an IndusInd gained around 6.2%, and a Yes Bank gained around 5.2%. So there were gainers in the market. Other beaten down names like BHEL, that was up around 3.1%, and an HDFC Limited was also up around 2.8%. So there were gainers. On the declining side, oil and gas names fell quite sharply. The BSE Oil and Gas Index, the Realty Index, and the Metals Index were all down between 3 to 3.5%. You know, among some of the large caps, Bharti Airtel fell very sharply, 6.8% down. Reliance Industries was down around 4.7%. So on the declining side, there was no sector-specific move that we saw, but rather across the board, heavyweights fell, and you know, some of the segments which will be impacted more by the rupee depreciation, those are the ones which fell. And let's not forget, the rupee itself closed near the 65 per dollar mark, which is another record low. So a lot of fear driving investors. Experts are not sure that this fear is going to calm down now. People are waiting for the FOMC meeting minutes to come out and see what they can draw from there. But it seems that the decline does not end here, and we could see some more pain before things start to look up. That's all from us today. Do log on to livemint.com for more details. Thank you.